Welcome back, everybody. Sive Morten here with the Forex Peace Army.com. Let's take a look what's going on in the gold. So recently, gold still has dropped out of the consolidation that we discussed in the morning. It was some kind of the triangle, and it was nice upward action after the payrolls report, which has actually confirmed the possible strength of the market because it actually hasn't followed to the overall pressure from this data and going to the upside instead. But recently it was really fast action. I suspect that it was not due to some economical factors in relation to demand and supply on the coal market in particular, but it was external factor, as I explained today in the euro currency video. If you take a look at other markets, you could see the clear demand for the dollar. Dollar is rising here, forming the same bullish grabbers that we suggest, and at the same time you can see big demand for the 10-year bonds. Not, of course, only 10-year. This is just the chart of the 10-year bonds, but probably you will see the same candle on other United States bonds. Hence, clear demand for the bonds here as it yield drop really significantly. It's a big candle for a bond market. It might be, and actually you can see that other risky assets also has dropped, particularly the Bitcoin. I am not excluding the situation that some big player or somebody just have accumulated some liquidity and investing on the United States bonds, rebalancing of the portfolios or something, or planning some trade or something, because I do not see other reasons currently for such a performance on particularly on the gold market. So Iran situation still stands on the table, and overall background has not changed significantly. Hardly this is just late reaction on the payrolls report. There's something different stands behind it. Maybe we will know it because, well, usually such as events become in public a bit later, within the 1-2 days when information is coming to the media and they start releasing this in the news. Then we could see probably some reasons for that. But for now, it's obviously that it's some rebalancing of the liquidity in favor of the bond market in the United States. That might trigger the performance on the gold. Maybe it might be not so, but you could see that the same action stands across the board, not only on the gold. This is not just the gold sell-off. This is downside pressure exists on the Forex, on the Bitcoin market, on the commodities, and gold in particular. So we will see what will happen. Currently, situation on the gold market stands a bit uncertain. Why? Because on the technical sides, it's more and more signs appearing of inability of the market to start upward action immediately. I do not know what will happen today's CPI report, but I suspect that hardly it will make actually big impact on the performance of the gold market. It's more probable that if Iran turmoil starts in the weekend, that might make better impact on the gold market. But for now, you could see this is a kind of the market is forming higher lows, but it can't break the area around 51. So it's kind of the pressure is rising here, but probably not yet. Nominal trend remains bearish, but we should remember that on the weekly chart we have big bullish grabber starting from this low. So all the space that where market theoretically could fluctuate will not break this big mid-term bullish pattern. We could even get the retracement down back to the 45.50 area, but it still will keep chances on the bullish upward continuation just because of the existence of the grabber. If only market will drop below these lows, this situation game will be over. But for now, whatever retracement will be, it is not breaking the big pattern. So for us, maybe it's even not bad to get a bit deeper retracements and to consider once again another chance for taking position with the weekly pattern. This is actually how we have started this week. So that was first opportunity. On this week, we said take a look on the pullbacks if we'll get retracement. It's maybe second opportunity for taking the position with the weekly grabber. On the following time frame chart, you can see reaction on the COP still started, but at this point, I do not see a clear background for immediate position taken. So for this type of action, we are not at some strong support. So it's still some room until the confidence support around 48, 30, 48, 45. I do not have here any clear patterns. So after this drop, market just showing some consolidation, showing nothing interesting. So I suspect that to take the decision on the entry here, we have to get some patterns. We have to get confirmation of the support levels and signs that market is really respecting it and it's ready to reverse around this level. For now, I do not see it yet. Besides, on the hourly chart, take a look. It might be, so here's the trend has been broken down yesterday, and here's maybe even some bearish continuation pattern. Actually, here we need to keep an eye on one of the possible things. First, for example, if market will drop more, reaching of the confidence support area, we could wait for some clear patterns around it. If we will get it, we could consider taking the long position. Conversely, it might be on some event upward breakout and returning back around the top. So treating this as a failure breakout, returning back up, that also might be acceptable sign that gold is preparing for upward continuation, and in this case we also could consider taking the position. In the current circumstances, we do not have nothing, so neither first nor second setup. We have the data release right around the corner, and we are coming to weekend. So it means that, at least by my view, in the current circumstances, I think that better to just take the pause and see what will happen.